Now, later in the programme, we'll bring you our special correspondent Stuart Ramsey's report on how both sides of the Syrian conflict are engaged in bitter clashes that make the situation increasingly intractable. So how is the crisis in Syria affecting oil prices, and what could be the long-term consequences of a prolonged military intervention? Well, here with me in the Gherkin is Dr. Florence Eid, Chief Executive of Arabia Monitor, an independent research firm specialising in the Middle East and North Africa. Nice to see you. Many thanks for coming in. So China says a strike against Syria would damage the global economy. Is that true in the long run?
Not in the long run. It would cause a spike in oil prices. In terms of understanding how these events tend to affect global oil and asset markets, it's important to hark back, for example, to an event like the 2006 conflict between Hezbollah and Israel. We saw impact on global markets across asset classes for a few days. We saw oil prices spike, then they come down, they normalize again after a period of time. It is, of course, worrisome that oil prices are already high. Of course, today, oil prices are not where they were in 2006. At the time, oil prices were around $80, $85 a barrel. So they're already quite high in terms of the recovery.
Yes, we're above 100, well above 100.
Absolutely. So we could very well see a spike above 116, which is where more or less where prices are today. They'll come down, but the point is that a continued price of oil higher than 100 by a significant amount is difficult for global recovery.
Is this just China talking its own book? Because, of course, it is a huge importer of energy and stands to lose most from a spike in oil prices, especially if that spike remained in place for some time.
I think China is talking its own book in terms of both the economic implications, for sure, but also in terms of the politics of what's going on. The Chinese position through the Arab Spring has been consistent. It's been against foreign intervention of any sort. I was in Beijing the week of the assassination of the American ambassador in Benghazi, and I was reading the Chinese press, and it was very interesting. The general message was, this is what happens when you intervene.
The strange thing for me in all this is that in pure economic terms, forget the politics and the national identity, Syria is a nation of no consequence. Its GDP is $100 billion. It's not even as big as a big US or UK corporation.
Yes, and it's practically an oil importer. So you would think that the impact on oil prices should be minimal. What is happening is that you're looking at a situation where oil markets are already stretched. Pronouncements about the release of US reserves in the case of a strike are meant to cool markets down in anticipation of a strike. But you have Libya down to 200 barrels a day from 200,000 from 1.6 million. You've got skirmishes between South Sudan and Sudan still, and negotiations over oil production. You've got a stretched market, and you have geopolitical risk. You've got Egypt still not stable. You've got the Iran dossier still very much open and inconclusive. And so markets look at this and think it's a powder keg. A little spark anywhere can cause a problem, and therefore asset prices start to become more volatile.
It's an unfortunate fact, but wars invariably produce economic winners as well as losers. Who are going to be the winners from all this?
Today, the winners are all oil exporters who are benefiting in terms of revenue. But I have to say, on balance, these very same exporters of oil, having regional turbulence like this doesn't suit them.
Yes, they're in the middle of all this.
So they're in the middle of it and trying to intervene in a way that they think is constructive. Unfortunately, I think there will be no winners from this, and the only solution to the Syrian crisis today is a political one, which is why I very much hope that over dinner in St. Petersburg they manage to find a way of discussing Syria, and I suspect they will. That's not to say there will be a breakthrough. I don't think there will be a breakthrough in St. Petersburg, no. There will be very likely an attack of some sort, and this crisis is likely to drag on further until a political solution is found.
But until then, the markets remain relatively phlegmatic. The stock market today in London was up 50 points.
And it will be. I mean, even if there's a strike, markets will be rattled and then they will resume.
All right, Dr. Eid, nice to see you. Many thanks for coming in.
My pleasure.
Well, on Sky News for iPad, you can find out more on the crisis in Syria.